Okay, let's dive right into this. Welcome to today's Explainer, where we're looking at, honestly, one of the most explosive financial stories of our modern era. We're unpacking the absolutely breathtaking rise of Anthropic. You really have to forget the old cliche of a scrappy tech startup in a dusty garage. Today, we're talking about glowing neural networks, hyper-advanced server rooms, and a paradigm shift so massive, it's literally rewriting the rules of human output. $965 billion. Following their latest $65 billion Series H funding round, Anthropic has officially cemented itself as the world's most valuable private AI company. I mean, just think about the gravity of that number for a second. We are talking about a legacy automaker that took a century to build up its infrastructure. This is a frontier technology lab that has rapidly scaled a mountain of capital, hitting a valuation that actually rivals the GDP of entire nations. Now, to truly understand how we arrived at nearly $1 trillion, we have to look back, though. Not very far at all. In 2021, Anthropic was founded by former OpenAI staff. And the deep irony here? They actually walked out because they felt AI was moving way too fast. They wanted to pump the brakes. Yet, just a year later, in November 2022, the launch of ChatGPT fundamentally altered the entire landscape, and soon we had Claude on our screens, unlocking this massive wave of global capital. So today, the very people who wanted to slow things down are now driving a $965 billion powerhouse. All right, moving on to Section 1, a new headcount paradigm. $47 billion. That is Anthropic's staggering revenue run rate. Historically speaking, achieving that level of cash flow required an absolute army, right? Sprawling corporate campuses, endless layers of middle management, massive global sales forces. But the physical reality of Anthropic's workforce completely defies every traditional law of business scaling we know. Now, what's really interesting about this slide is the sheer math of it all. We're talking about an estimated 5,000 employees. And honestly, some industry reports peg that headcount even lower, closer to 3,000. But even if we look at the higher end against $47 billion in revenue, we're looking at a revenue per employee of over $10 million. Picture a premium, modern office space. You've got a relatively small, highly elite group of engineers managing massive GPU clusters and intelligent AI interfaces. They're generating mind-boggling financial returns with just a fraction of traditional human labor. Which brings us to a quote that perfectly encapsulates this new era. The ratio of intelligence to headcount has permanently shifted. For centuries, if a business wanted to scale its output, it had to scale human headcount. You want more software sales? You have to hire more salespeople. But AI has fundamentally severed that tether. The sheer intelligence running through those servers means technological output is no longer bound to how many desks you can cram into an office building. This completely shifts what the future of work looks like for all of us. And this brilliantly illustrates exactly what we mean. Let's compare this to the historical titans of the tech industry. When Google hit their first $30 billion revenue milestone, they needed about 32,000 people on payroll. Salesforce required an astonishing 79,000 employees to hit that exact same mark. Meanwhile, Anthropic is pacing at $47 billion with just 5,000 people. It's not just an improvement, it's a generational leap in corporate efficiency. It's essentially a completely different operating system for running a business. So that brings us to Section 2, the greatest capital wave. Before the generative AI boom truly took off in 2022, the world's frontier AI labs raised a combined total of roughly $1.4 billion, which is a respectable number for sure. But following the mainstream explosion of tools like Claude, that number absolutely rocketed to $23.2 billion in 2023. And by 2025, projections put this wave at $88.9 billion. The influx of capital we're seeing is practically a vertical line. But wait, it goes even higher. By May 2026, the projected capital requirement and investment in frontier AI labs reaches a truly staggering $243 billion. Digital money streams are flowing from pretty much every major financial institution on Earth directly into the server rooms of these AI startups. It is an overwhelming historic mobilization of venture capital, and it's reshaping the global economy in real time. So the crucial point is this: nearly $400 billion poured into foundational AI in just 3.5 years. Just think about that time frame. 3.5 years is barely enough time for a traditional corporation to launch a single new product line. Yet a completely new technology sector has absorbed nearly $500 billion. The sheer financial gravity here is completely unprecedented in modern history. All right, let's head into Section 3, the $1.8 trillion climax. $1.8 trillion. That massive number represents the combined valuation of the two major players forming an absolute AI duopoly right now, Anthropic and OpenAI. Together, these two labs command a valuation that completely dwarfs entire legacy industries combined. They are essentially the twin suns around which the rest of the entire tech ecosystem is currently orbiting. Let's move to and see how this builds, because this creates an absolutely incredible market paradox. Despite that commanding $1.8 trillion valuation, both of these companies are still entirely private, and incredibly, neither of them is actually profitable yet. No way, right? But it's true. They are burning through capital to build the vast computing infrastructure required to train the next generation of AI. They generate tens of billions in revenue run rates, yet the sheer cost of compute keeps them in the red, all while private investors continue to drive their valuations into the stratosphere. And that leaves us with this final, really provocative reality. The collision between this private AI revolution and Wall Street is completely inevitable. So will the IPO queue forming behind these giants survive the biggest public market test in history? Will everyday retail investors validate these trillion-dollar price tags, or is the market going to demand a return to traditional profitability? The answer won't just define the stock market, it's going to define the technology you use every single day for the next decade. Thanks for joining us for this explainer. We'll see you in the next one.